Right, we are on the Statement of Comprehensive Income. We're on exercise 3, activity 2, and we're looking at the worked answers. These are about profitability. So we've got an activity with 2 questions in it. The pizza van has decided to do a bog off, buy one, get one free on Mondays, as sales are often slow. Remember, bog off is a piece of sales promotion from the promotional unit. Domino's do 2 for Tuesdays, don't they? So it's quite a common technique. So we're going to first of all explain how it might affect their gross profit, and then we're going to explain how it affects their net profit. Before we start, how to calculate gross profit. So here we go. Gross profit equals sales revenue minus cost of sales. So if we're explaining how it might affect their gross profit, we're going to look at how it affects their sales revenue and how it affects their cost of sales. So this offer should encourage more people to buy the pizzas. Yeah. So that's my explain. The sales revenue will increase. That should be true. Number 2, they will be selling more pizzas. Therefore, my explain, the cost of sales will increase. They'll need to make more pizzas, so of course it will. Now we're going to link these 2 things together to explain the effect on gross profit. As each sale they make includes a free pizza, the cost of sales will go up faster than the sales revenue. I hope you see that. The impact of, so that's another explained thing, the bog off offer, is it will reduce their gross profit. However, or unless my other connective, there is a huge increase in sales. So pretty much, and if the bog off offer increases sales revenue ever such a lot, even though cost of sales might go up, it will still result in a higher gross profit. We don't know, but we need to be aware that it will affect it in one way or another. Second question, we're asked about their net profit. We're going to approach it in exactly the same way. So net profit is gross profit minus expenses. Now we've already said what we think about gross profit. So we're going to be using that, but using it with expenses. We've given a scenario when gross profit goes up. We've given a scenario where gross profit goes down. So here we go. So if there is an increase in gross profit, this should result in an increase in net profit, as expenses will not have changed because of this offer. They won't be having to pay more rent. They won't be having to pay more advertising or insurance. This will all stay the same just because they're working on a Monday. Bearing in mind sales are slow, they won't need any extra staff. But if there was a decrease in gross profit, then the expenses do not change, so there would be a decrease in net profit. So net profit could be positive or negative, it depends on the circumstances.